All right, everyone, we're back again. In this episode of our investment notes, it's important to note that the market today is actually quite lively and vibrant. By the way, hey, you're not wearing your glasses, right? I know you just couldn't see clearly, but actually it has risen above the expected level. Just yesterday, it also saw a rise above this mark, but unfortunately it closed down, experiencing just a slight drop of 0.2 points. It's down by 0.099 points, reaching 27,000. There are actually a lot of people talking in the room. This year, reaching 30,000 points is hopeful. However, let's talk about it first because the overall trend of the Hong Kong stock market has actually seen some declines. Yes, it did drop a bit initially, but then it quickly bounced back up. Today's focus is actually on 4 specific stocks. One of them is Kuaishou, which has recently reported some truly impressive results related to AI advancements. They are in possession of a potentially valuable AI product. They mentioned a monthly revenue of 20 million USD, hoping to achieve an annual target of 250 million USD. As a result of this significant news, it has positively stimulated the stock market today, and it stands out as one of the 4 notable stocks. Regarding 1024, it closed the day at 81.95. Another stock that we haven't heard from in quite some time is Yutai Technology, stock number 1478. They officially announced their earnings report stating that last year, their overall annual comprehensive growth was an impressive 4 to 4.5 times. They highlighted that the global smart driving sector, along with the rapidly advancing IoT smart terminal industries, have significantly enhanced their camera module sales. This surge in sales reflects the growing demand and impressive technological advancements in these fields. Quite remarkable indeed. But wait, did I misunderstand this situation? Is there indeed something valuable to sell? The number 1478 might be where I got confused. This is in fact Yutai, which has risen by 14%, correct? That's incredible, yes. We haven't discussed this stock in a while. It was previously in the mobile phone sector.
They previously operated in the mobile supply chain, but are now concentrating on the smart driving supply chain. It's a bit different.
Besides these 2 points, this morning the company actually released some new information regarding Haidilau's latest developments and updates. Oh, Haidilao is very cheap.
No, I really want to ask you what's going on.
When you arrived at 9 o'clock, Haidilau's stock had already increased, so there was no need to stress that you weren't late. This was largely due to Zhang Rong returning to oversee operations. After the news broke, it actually resulted in a remarkable 10% rise in their stock this morning. This development highlights the significant impact of management changes on market performance and investor confidence. The market is currently performing quite well, up 9% to 15.745, or rather 15.74 for Haidilao. In addition to Haidilao, well-known brands such as Bubu 520, Taihing, and Jumaoju have also gained significant popularity. The market is buzzing about the upcoming 2026 New Year's holiday, while everyone eagerly watches the popular show, A Bite of China. What does that mean? It means everyone is going to eat in China. Ha ha. This development has significantly boosted the overall restaurant industry.
You have 6 million people in Hong Kong. Yes, they all go to Shenzhen for hot pot.
It effectively stimulates the local market, and there are also many people traveling from Shenzhen and other areas of the country to dine out.
Yes.
So if everyone decides to go out together, how many additional tickets will there be available for purchase? Haidilao proudly announced that during the festive New Year's period, specifically from December 31st, 2025 to January 1st, 2026, their restaurants located across China welcomed an impressive total of more than 4.5 million eager customers, showcasing their popularity during this celebratory time. Yes, 4.5 million. What is the population of Hong Kong?
There are 8 million in Hong Kong.
That's almost half of Hong Kong.
If you put it that way, it's like having 8 Macaus.
Haha, that's like receiving the equivalent of 8 entire Macau's worth of eager customers. It's a bit exaggerated for just 2 days. Right? In just 2 days, it'll be perfectly fine. Of course. It's been 4 full years since Zhang Yong returned to take on the management role again. So, what are your thoughts on the current Haidilao market? I've observed that there are now an increasing number of hot pot restaurants throughout China, which presents quite a considerable level of competition for Haidilao. This surge in options could potentially impact their customer base and overall market presence significantly.
I believe this topic is truly worth discussing and thoroughly researching further. Today's rise is primarily driven by the widespread belief that Zhang Yong, who serves as both the CEO and head chef, will introduce some fresh and innovative ideas. Can we do better? Well, the premise of doing better is that it wasn't working well to begin with, right? So it honestly wasn't that bad to begin with after all. Yes, but it's actually a complete deadlock, or rather a complex dilemma. You just pointed out a very important issue. The competition seems very fierce. So where exactly does Haidilao find its competitive edge? What's their selling point? Maybe it's their service? Their staff members are all highly skilled, aren't they? They can expertly toss noodles, right? Yes, they certainly can sing and dance, can't they, right?
They have skills.
So, can this marketing strategy successfully attract a large number of customers? I'm uncertain about their long-term loyalty. At least it might be useful for younger people, but for me, it doesn't matter much. I just go to eat. Yes, in fact, I must admit I've never even been to Haidilao. You haven't been, and I've never been either, really. I've never been, not even once.
Oh, okay, really? You're the first person I know who hasn't been to Haidilao. No mistake, really. But I feel like Haidilao has lost a lot of its secrets compared to before.
Are you referring to Hong Kong or Shenzhen?
Both, they've lost a lot of secrets. In the past, for instance, during my pregnancy or when I took my kids out to enjoy a meal at Haidilao restaurant.
Your son is now taller than me. It's exaggerated. It's been a long time, man.
Back then, they would prepare little gifts for you with great care. Yes, but now it seems like due to the economic environment, those things have decreased.
Could it be that you don't have a belly anymore?
It's not quite that simple. I have kids, sure, but they don't seem to show as much interest anymore. Perhaps going on trips has become more appealing now, or they might have simply grown up and aren't as cute anymore. But also in the past, there would be some special things like making origami cranes with you, and they might even give you a few paper bills.
A paper crane, how do you borrow a gold ingot from them?
Approximately $5.
Yes, that's absolutely correct. However, let's redirect our focus back on track. In the past, we were able to accomplish this, and if anyone is curious, you can always review the historical numbers. Hey, you see the per capita consumption? The entire group's per capita consumption is maintained at around $90. Absolutely. And how many times do you believe they turn the tables over the course of each day? About 3 times, roughly, right? Yes, almost. The latest figure is about 3.7 times. 3.7 times is actually quite accurate. You can complete 2 night rounds by dividing it into 3 shifts.
You all are similar, correct?
By scheduling additional rounds in the early morning and later in the evening, along with 1 round during lunchtime, you have effectively maximized your table turnover for better efficiency. To effectively drive company growth, you must consider how to boost turnover rates and increase per capita consumption. Raise prices. But raising prices in a highly competitive market filled with many options isn't that easy, right? It's very difficult. One effective way to significantly increase sales is to strategically open new branches. Yes, to open a new branch, you need to increase your capex, which is a significant fixed cost. However, these options may not align with what the market truly desires to see. So if you ask me if the new management has any plans, I would wait for them to have a plan. Perhaps they will establish a flat line for measurement, or I could assist you in documenting it. What I mean is, they are already aiding you in this process, especially by selling items that are simply boiled and ready for consumption.
Oh, they actually have something similar to that, mentioning that they plan to introduce a greater number of young management professionals in the organization. That is to effectively make it appear younger.
Typically, when you refer to young individuals in management roles, there can be instances where they may occasionally stray from the intended path or direction, which can be quite intriguing to observe. Their fresh perspectives can lead to unexpected outcomes in the workplace. Yes, have you noticed? Some of the more unconventional dining options available can actually be surprisingly quite strange. For instance, there's a dish that's now considered mainstream, like the flavorful spicy pork trotters. Oh, these practices or behaviors are no longer considered strange or unusual, and they are now widely accepted throughout mainland China. But in various other locations or markets, they may not be widely accepted.
They might be overly stimulating or too novel and engaging. So perhaps when you first arrive at a new place, some people might need to take it slow and adjust gradually.
Or you could try a delicious combination of tomato and egg, then add some savory fish balls. Oh right, these situations can occur. In the bustling restaurant world, there are certainly savvy and knowledgeable individuals. But can you truly reflect that expertise in their financial statements? Yes. As an investor, you definitely need to look at this. Can your stock price continue to sustain its impressive upward trend over the coming months? So the important thing to consider now is what I just mentioned earlier. Take a look at this chart. It appears quite promising, showing a clear upward trend as you move from $12 to $16, correct? However, if you take a closer look at a longer-term chart, such as one that spans several months or even weeks, and look back over the years, it actually provides a clearer reflection of the overall consumption patterns and trends in mainland China. This broader perspective can reveal significant insights into how consumption has evolved over time in response to various economic factors and events.
If you take a closer look at the weekly chart, you'll see that it has still not returned to those higher levels.
Yeah, just look at these. It's way too exaggerated, honestly.
There's actually an overwhelming amount of competition. Sometimes when I go to the mainland, you have to wait a long time for Haidilao, and if you don't wait, you just eat. Of course, I won't wait. I'm not living there. It's a waste of my time. The second one is fine. I think there might be other flavors. So in the catering industry, I'm wondering if this change will also apply. Like maybe stir frying is just following the trend.
Let's focus on investing in AI stocks, as I still see business opportunities there.
Absolutely. Speaking of artificial intelligence, today there's yet another stock that's significantly boosting the entire market, which is Alibaba Cloud, correct? Is its current price 241 or 214? I can't quite recall. It's not Alibaba Health, it's Alibaba Health, Alibaba Jian. So Alibaba Health actually closed today at 77.8. Yes, I misspoke. Alibaba Health stock price closed today at 77.8, reflecting market performance. In fact, it increased by an impressive 1.8% today. Yes, it rose by 1.8%. So why did it happen? Additionally, there's breaking news today regarding the reasons behind its dramatic rise, specifically discussing their new drug designed for treating infant hemangiomas. Alibaba Health is the very first company to successfully launch it online. And this news also contributes to pulling Alibaba's stock prices up today. That is to say, their own stock closed today at 169. This stock, identified by its ticker symbol 9988, is related to Alibaba Cloud. As we previously mentioned, many major firms continue to maintain a positive outlook on Alibaba's cloud business and its future growth potential. Additionally, I noticed that their president expressed optimism last year during a speech which you also referenced, correct? You mentioned that detail earlier, right?
It's not just talk about 9988. You say it is, right? We must monitor 9988 closely this year.
Also, I remember last time we talked about how everything else has already gone up. Only 9988 is being held back. Will it fall behind?
It's falling behind now. Yes, the first category of stocks is lagging the most. The second category has unique business aspects. Actually, there's not much else in the Hong Kong stock market. And regarding the investment theme, what did you see in the fourth quarter last year? What was holding it back? Which stock was the strongest? Oh, Nvidia. Wait, it's actually Alphabet. Yes, indeed.
So what exactly is the connection here?
Apologies, but Alphabet truly embodies the comprehensive AI industry chain and concept. Everything related to it is encompassed within.
Well, you truly can't find another one like this.
Yes, that's right. Certainly. You can easily and directly compare the performance of 9988 with F8. However, if the breadth of your exposure to various AI technologies and applications is sufficiently wide, then the potential attractiveness of your venture to investors will likely be quite significant.
And they mentioned that they have an advanced AI system under their wing called Tianwen, which is quite interesting. They said that the number of active users in the last 2 months has already reached 100 million. It has reached 100 million. And tomorrow, they will hold the highly anticipated launch event for the innovative Tianwen app. That's right. I recall that this app appears to function as a helpful consultation tool. Tianwen is essentially a large language model, isn't it? It's indeed a model. Yes, absolutely a complete model. So, if you make that statement, are you merely following in Alibaba's footsteps, or is there still potential space for you to make significant progress and catch up?
Keep chasing. Take a closer look at this chart. Yes, it's clearly displaying a flag pattern formation. This is a comprehensive weekly chart showcasing a flag pattern, and you can clearly see it reverse direction back in July of last year, indicating it definitely has a significant chance to replicate that movement again. For the moment, let's consider $200. Yes, exactly. And there are still numerous water levels to consider and evaluate, especially when discussing the situation this year.
Are you referring to this year or 2026? Is it the year of the snake 2026?
Yes, okay, it's the year of the horse.
Right, okay, year of the horse. Yes, it's all about the year of the horse. Speaking of which, in the exciting year of the horse, our engaging topic today focuses on effective strategies to navigate and succeed in the stock market throughout this year. In this exciting episode, Ryan will delve into and share some valuable insights on the intriguing Year of the Horse strategy, exploring its implications and applications. Just to give a little teaser for what's coming next week, I will be inviting a special guest who has promised to creatively utilize this speed and direction in a vibrant pink theme, right? Stay tuned for an engaging discussion that you won't want to miss. He stated quite clearly, indeed, he brought it up, so everyone should pay close attention to what he said. Purple rice astrology. Oh my, purple rice astrology. Yes, it's quite complicated and challenging, and I'm afraid I might not handle it very well.
I won't you let him talk, right?
Yes, it sounds confusing, but I'm looking forward to it. However, for the moment, let's have Ryan share some insights first. Sister, it's really not okay we're discussing the Year of the Horse, which will occur in 2026, as people often claim it's a year associated with fire. Or something like that. They say that this fire luck is exceptionally strong and there are countless opportunities available everywhere you look. This is something I generated with AI. Then AI predicts that following the international economic downturn and turbulence, there will be a significant rebuilding process. Certain industries have the potential to generate new wealthy groups, which implies that there will emerge some rising stars who achieve significant success and recognition in their respective fields. Some specific industries will likely experience a significant revival in the near future. At the same time, this year represents a significant opportunity where numerous chances and inherent risks coexist, particularly given the uncertain outcomes of AI advancements. Additionally, I've gathered some insightful information today, and there are several experienced practitioners who confidently say that this year's fortunes indicate a positive outlook, suggesting that both Hong Kong's stock market and property values will continue to rise steadily over the coming months. This optimistic perspective could be attributed to various economic factors and trends currently influencing the market dynamics in the region. Oh, really? Hey, but let's have a conversation about the intriguing zodiac signs. I didn't specifically ask about them, though. I'm a cat. Can you verify that for me? You're a cat, so that means you're a tiger, right? No, I'm a cat. Oh, okay. But people born in the year of the horse should be cautious. Yes, we see that February is fast approaching, heralding the beginning of spring. And shortly after, it will be the year of the horse in the lunar calendar.
So, when is the beginning of spring?
It appears to be February 4th. Yes, I remember because I saw it recently.
Got it. Yes. Let's return to the main topic. What was your question?
I actually just wanted to ask how we should effectively plan for the upcoming year of the horse.
Well, regarding investment deployment, of course. Yes, we've subtly hinted at this point a bit earlier in our discussions. If you take into account the overall deployment strategy, it's important to understand that I won't be diving into specific numbers, as that would be unnecessary and unproductive. Everyone is aware that it's the year of the snake, and indeed, it promises to be a fiery year ahead. However, if you look at the overall economic situation, it's relatively lukewarm. Yes, it's somewhat similar to a carefully simmering soup. It's really not bad at all. It's definitely warm, but just mildly so. Quite nice. But it's important to note that it's not currently experiencing a state of overheating, which is indeed beneficial for the overall monetary policy framework. We must consider the fiscal policies of different countries. I would like to ask you whether we are discussing the complexities of global politics or the intricacies of government economics, all right? Oh yes, the economy is unstable and slow. This relates to monetary policy. As long as you maintain a steady and moderate economic growth rate, you will consequently have greater flexibility and room for effective monetary policy adjustments. That's the first point, but the second is to pay attention to fiscal policy. More and more countries are facing budget deficits. Although governments are becoming aware of this issue, like Donald Trump, for instance, we can see that the US government is already aware of this problem. But it's difficult to manage welfare amidst such turmoil. Yes.
The US is currently facing a significant amount of debt.
Hey, there's a significant budget deficit. Yes, the fiscal deficit is a serious problem that needs to be thoroughly addressed this year in 2016 during the year of the monkey. Yes. In addition to that, if you take a closer look at certain commodities, which you just inquired about regarding the political situation, it becomes evident that there are growing concerns that cannot be overlooked.
Inquiry about the 3 major oil companies and their current status.
Is that right? That's about oil prices. It's about the US stock market overall. Stock prices are currently under analysis due to various complex influencing factors. It's not just about oil prices. Well, in regard to the various commodities we've been analyzing, you know we discussed this topic in detail earlier this morning, as you had asked me about it. Hey, Iran is clearly in conflict, but it's not just a war. It's a civil war, or internal strife. There are some strong protests, and now everyone is worried that the US might intervene. The US has made it clear it won't intervene at this time. Moreover, people actually don't believe the US will intervene. Well, it seems they do not believe that Western countries or other global powers will resort to using military force to intervene effectively in political issues or conflicts around the world. Well, the reason is that everyone knows the cost is too high, so the oil prices aren't reacting much at this moment. But I believe a black swan event will occur.
That is, if something unexpected occurs, such as a sudden military action taking place.
Absolutely. How can you be certain they won't engage in warfare? It's possible they could choose to target another nation. Or it could simply be a decapitation operation. You never really know. Yes.
Yes, indeed. But actually, when they discussed the possibility of targeting another president, it was specifically related to Venezuela, correct? They were eyeing its abundant and rich natural resources as a crucial bargaining chip in their strategic negotiations.
This is the fundamental essence of war, ongoing conflict, or the intricate relationships between different countries. Yes, it's really not just about right or wrong. Interests truly are the very essence of politics. First point confirmed. Secondly, it is important to note that Venezuela's vast oil resources, which are immensely valuable, were at one time owned by American companies before being nationalized. Oh, they have just nationalized it now. Yes, I'm not saying it's definitively right or wrong, but whether it can be classified as purely plundering is something we definitely need to investigate further. But what we investors really need to be concerned about is how this ongoing chaos will ultimately react and affect our investment strategies and decisions.
So now when it appears like there isn't much momentum in the market, everyone is in a cautious wait-and-see state. patiently waiting to see what developments will unfold next before they begin to closely observe and analyze oil prices again.
No, I actually think we're almost at the end, to be honest.
Yeah, why do you think we're almost at the end?
Well, the economy isn't doing badly at all, so don't forget that. Yes, the economy is indeed rising at a moderate pace. So if that's the case, the oil prices are a support.
I believe that the moderate rise we are observing in the economy is primarily due to the fact that it was significantly too low just a few years ago, and now it is gradually climbing back up to healthier levels.
It's currently in the process of finding a bottom, and additionally, you can observe that the US dollar is beginning to identify its own bottom as well. However, whether it has definitively reached that bottom point, I honestly cannot say with any certainty at this time. Yeah, the US dollar will weaken sooner or later. It's quite annoying.
In addition to your previous points, the global economy is currently exhibiting a rather lukewarm performance overall. In Hong Kong specifically, the market turnover today is still experiencing a significant influx of capital, with approximately 3,400 million Hong Kong dollars in trading, particularly in the Hong Kong stock sector. Given the current situation of Hong Kong stocks, is it possible for us to adopt a slightly more optimistic perspective regarding their performance this year?
I previously thought the chance of Hong Kong stocks reaching 30,000 points would be quite difficult. The chance exists, but the difficulty is significant. Yes. Hey, it's mainly because your economy is currently unstable. Additionally, you don't really have any particularly strong or enticing sexy stocks in your portfolio. I think this is indeed a question mark, but I'm feeling cautiously optimistic about it. The reason for this observation is quite simple. China's export data is in fact showing signs that it is actually not bad at all.
Proceed, my apologies. Certainly, here's the expanded text. Regarding China's export data, you can feel free to ask me about it later. In addition to the overall atmosphere of the Hong Kong stock market and the important export data, it's worth noting that initial public offerings, IPOs, have also made a strong comeback in Hong Kong, solidifying its position as the premier destination for IPOs globally. That's right. It's been 25 years now. There should be even more initial public offerings, IPOs, coming up soon. In light of this situation, the stock market is expected to keep heating up and gaining momentum in the coming weeks.
It's all lined up. Yes, or they are mutually causal. If the stock market is thriving, it attracts interest in the new stock market. Yes. And we have clearly explained the reasons on several occasions. Some of your mainland enterprises could potentially involve the use of artificial intelligence technology. So, will the United States grant you permission, and will China permit you to travel to the United States? Thirdly, the United States has significantly tightened its listing restrictions this year, particularly for foreign global stocks seeking entry into its financial markets. Yes, and there are limits on the composition of investors.
Will this situation particularly impact China? Yes, it will have significant effects.
The wariness has increased, so it benefits Hong Kong.
In fact, Hong Kong has always needed to strategically position itself in this particular manner to maintain its unique identity and thrive in an increasingly competitive global environment. This situation is due to the latest China's export data. Is there anything particularly noteworthy about China's export data? Because I observe that China's exports are still significantly constrained by existing tariffs imposed by various countries, limiting their ability to compete effectively in the global market.
Today, the comprehensive economic data for December of last year was released, revealing a significant trade surplus. It has surprisingly increased significantly beyond what market expectations predicted. What is a surplus? Exports minus imports. So you see, I'll check right away. Is the import file actually bad or problematic? Insufficient domestic demand? No, the imports are there, although the growth is just so-so. But there is still some growth.
Yes. I'm not entirely sure if this is the exact information we discovered together, but I noticed that the total value of exports is 37.3 million.
We typically calculate the variation for imports and exports.
So they say the current trade surplus is estimated to be around $7.03 billion. That means it's in trillions, right? Yes, with a growth of 6.2% in exports.
Yes, we closely analyzed China's foreign trade data, and currently imports are flat. I'll find it back for you to read first. Take your time to read. Actually, the data we have collected is like this. So, the foreign trade data is released by Customs China for the whole year. The total imports and exports is 45 trillion with a growth of 3.8%. This is the total amount for the year. Exports are 27 trillion, so there is a growth of 6.1%. Imports reach 18 trillion with a growth of 0.5%. Throughout the entire year, it is clear that the surplus is indeed quite significant. However, it is important to note that your source of this surplus primarily stems from imports, and the growth rate of these imports is notably lower than that of exports.
The growth rate is lower than exports, that's right.
So, this means there's a slight concern about insufficient domestic demand. Is it about importing medicine? But the market interprets this situation as positive growth, which is acceptable, as it's better than what analysts expected. And everyone will be quite surprised to see why your exports are experiencing significant growth, or at least showing decent growth, especially in the midst of a trade war characterized by high tariffs impacting international trade dynamics. First, during the previous year, there was a significant stimulus implemented prior to the introduction of the tariffs, as consumers and businesses alike hurriedly rushed to purchase goods from China before the tariffs took effect and began to increase prices. This surge in buying behavior created a temporary spike in imports as people aimed to stock up on products that would soon become more expensive due to the impending trade measures. This is because the rates from several Middle Eastern countries also demonstrated significant and noteworthy growth. Thirdly, there has been a notable increase in the import and export of various semi-finished products, such as steel, which are notably not subject to any tariffs, thus encouraging trade growth. That's right. But when you add it all up, for example, the trade with Belt and Road countries reached 23.6 trillion, growing by 6.3%, accounting for 52% of total exports. The trade relationships with ASEAN, Latin America, and Africa have shown impressive growth lately. ASEAN grew by 8%, Latin America by 6.5%, and Africa's trade grew by 18.4%, clearly shifting the trade focus. The regions mentioned above were previously the largest buyers, with the US being the biggest trading partner. Yes, but now they are not buying. They are trying to reduce their dependence. First, Chinese exporters want to lessen their reliance on American importers. It's not foolish, right? If they have no other options, they have to buy from in China. I will buy in a roundabout way. I don't have to go directly in.
Yes, or maybe buy from other companies. I understand that. However, just a moment ago, it was brought up that imports could potentially be on the rise. You mentioned that it's indeed experiencing growth, correct? So I want to ask, if there is growth, in which areas is it growing? Is there any mention?
Well, if that's the case, looking back, mechanical and electrical products grew by 5.7%. Electronic components and computer parts grew sharply by 9.7% and 20%. As for crude oil and metal ores, those bulk commodities increased by 4.4% and 5.2%. Things like fresh fruits and edible vegetable oils grew by 5.6% and 16.6%, showing a significant increase in electronic products. Clearly, many of these products are not consumed directly within the country, but are instead processed for other uses. So often, these products are imported from South Korea, known for its quality manufacturing and innovative designs. The trade war has not significantly affected them.
Certainly impacted, wouldn't you agree?
The supply chain will change. They continue to import from South Korea, correct?
Yes, that's right.
Yes. Hey, because this is exactly how we envision it happening in our minds. The entire world operates much like a vast interconnected factory system. In this analogy, Korea plays a crucial role at the upstream stage of production, while China occupies the midstream segment. The downstream segment follows, where the final processes occur. If you complete the entire downstream procedure before exporting, then you may face significantly high tariffs on your products. The potential impact on China is primarily concentrated in the mid to lower stream sectors of the economy. If your upstream to midstream segments have already engaged in exporting, then the effects of the tariff will be relatively minimal. Right. But this doesn't mean it won't have an impact on the overall country and its citizens. Mid to lower stream factories will face challenges.
However, aside from that point, I also want to ask you about the fact that China has previously purchased a significant amount of US bonds. They have been systematically reducing their holdings, and the money generated from those reductions has subsequently been strategically invested in gold. In fact, China has been consistently buying a significant amount of gold over a prolonged period. Currently, gold prices are consistently reaching new all-time highs, which has garnered significant attention. What are your thoughts on this trend? What could be the potential underlying factors driving this domestic strategy and influencing investor behavior in the market? What does it truly mean to preserve financial value? Why are they consistently reducing their US bond holdings while still purchasing significant amounts of gold? The dollar is declining in value, so it's important to find a way to recover from this situation. Slowly.
My personal assessment and the overall country's assessment may not align or be the same. Well, this is a hedge, so as your dollar falls, theoretically the price of gold rises.
That's right. Yes, but Gary mentioned that Japan is also seriously considering exploring the seabed to search for valuable rare earth minerals. If they lose crucial allies such as Iran and Venezuela on the domestic front, how will they effectively manage their situation moving forward? The domestic energy situation. That's the situation.
Oh, without this financial aspect, it's really not a significant problem. The largest fear is running out of funds. If you have sufficient money, there are no issues. Yes, if you have money, you have options. It's not a big deal if you don't have allies. Hey, I heard there are none, right? Key is being able to purchase necessary items. Yes, it won't be that there's absolutely nothing. I mean, is Venezuela genuinely considered an ally? Well, yes, as they say, the citizens of Venezuela, when China and Russia come, are they just bringing corn cake recipes? Not really. That's right.
Certainly, there must be some truly valuable resources available.
That's because of my friend. So everyone, if your belongings are determined by your personal interest, it's easy to dismantle. That's right.
Oh, and Gigi mentioned that when buying things, you should go for high-end, like maybe the iPhone, you should buy the PRO because the lower-end items are becoming less cost-effective.
Why is that? Why? Why are you saying that now? Is there meaning in this?
So I sincerely hope Gary can elaborate further.
No, Gary said that the best cost-performance ratio is definitely the iPhone 11 or 17.
The 17?
Yes, it's not the Pro, not the Air, just the 17. Yes.
Why? Oh, maybe. There is no price increase at this time. Indeed, the pricing remains the same, but the quality of the products is quite similar. Yes. Additionally, we just discussed various global aspects, including the dynamics of China's exports and the situation in Hong Kong, as well as how these factors influence China's overall export performance and market trends. In our last episode, we didn't have the opportunity to discuss Japan in much detail at all. Right, regarding Japan, I noticed today during my research...
Oh, what did they send? In the last episode of our series, I mentioned that I successfully finished the comprehensive report. It's completed, done, and ready to go. I'm eagerly waiting for you to describe it to our clients in detail. So everyone, please keep a close eye on our various social media platforms. It will be posted there. Yes. It's written, don't worry. Okay, right.
Next stop is Japan. Japan and Europe, I really want to sneak a peek. I'm genuinely curious because I have many friends residing in Europe. I'm planning to meet someone in Poland for an important work project. Poland? Yes.
So vast, right?
I don't even know why I chose Poland.
But there are opportunities, and if there's a job, why not go?
Is it more challenging to find employment opportunities here compared to those available in Hong Kong?
The wages? Yes. This includes both Poland and the UK. Okay. However, if you consider taking on some of the more traditional jobs that are commonly performed by Hong Kong residents, such as cleaning, it's important to note that while I don't specifically refer to cleaning, many of these positions do indeed require certain qualifications. On the other hand, there are also higher paying opportunities available, such as those for truck drivers, which may offer a more lucrative income for individuals seeking better paying employment options. Oh yes, in Hong Kong, train drivers, if they don't study when they're young, end up driving trains when they grow up. I'm not talking about truck drivers, just truck drivers. Obtaining a truck driver's license is quite difficult in Europe and the UK, even more so than in Hong Kong.
So how hard is it to get a license in Europe?
Driving in Europe may be challenging, but everyone knows how to drive well.
I'm not entirely sure, but I've noticed that many friends who moved to the UK have struggled significantly to obtain their driving licenses.
Is it a language issue?
I don't know. Yes, I really don't know why, but it's much easier in Hong Kong.
Because if you already have a license in Hong Kong, you can just transfer it. Yes, anyway, but you can't drive a truck without a license. You must have a valid truck license, and buses also require a license. The income generated from driving is actually quite good overall. Yes, I believe that many of you might have already heard about some truck drivers whose unique and fascinating hobby is to learn about flying airplanes and improve their aviation skills. That's actually quite nice to hear. In Hong Kong, if you are a truck driver, you should be financially able to afford the lessons needed to learn how to fly.
However, you can't simply fly anywhere. You need to travel to specific destinations such as Australia to practice flying at high speeds.
Oh, right.
So what specific topic were we discussing just a moment ago? We were having an in-depth discussion about Japan and Europe. So could you explain the current economic situation in Europe? Let's focus on Europe first.
The Eurozone is facing low growth challenges, and it is evident that inflation is clearly quite weak. However, this also means that Europe consists of a diverse array of countries, and the associated fiscal and political uncertainties are quite significant and complex. However, the encouraging news is that by the year 2025, energy costs are anticipated to decrease, which will gradually start to reveal economic benefits by the year 2026, positively impacting various sectors across the continent. This will assist the countries in reducing their financial burdens and alleviating their challenging economic situation significantly.
However, setting aside the various side discussions, the UK has officially left the EU, which raises the question, does this mean there are no benefits for the UK?
In the United Kingdom, the forthcoming economic indicators will provide a clearer and more accurate reflection of the overall economy, and it is anticipated that the UK economy will be somewhat weaker in the year 2026. Before the UK officially left the Eurozone, many people did not view it as being part of the same economic entity, largely because the UK utilized its own currency, the British pound, and maintained a separate central bank, distinct from those of Eurozone countries. We typically analyze economies via their central banks. The Eurozone is served by the European Central Bank, or ECB. Yes, indeed, and the most significant risk currently facing the Eurozone is the unstable political situation in France. Yes, because it is evident that their parliament and political landscape appear to be quite fragmented and divided among various factions. A strong dominant government does not currently exist. This situation will make implementing fiscal policy reforms relatively challenging for policymakers and government officials. And why specifically mention France? Because France is the second largest economy in Europe, while Germany remains quite stable. However, it is significantly affected by its ongoing immigration challenges. You mentioned the diverse group of immigrants, and during that period, Malta was remarkably open and welcoming, allowing immigrants from various backgrounds to enter and settle in the country. This approach fostered a sense of community and enriched the cultural landscape of Malta. Yes, they accepted a number of refugees, whether they were genuine refugees or immigrants, including several individuals from Islamic backgrounds. The income generated by these individuals can often become a considerable burden on overall finances, as not every person is an equally effective or productive worker in their respective roles. I understand that a similar situation is currently occurring right now in the UK as well.
So they are significantly cutting benefits? Yes. And please don't allow so many immigrants to go there.
I can foresee that by the year 2030, at least the current trend will continue to shift to the right on a global scale, affecting many aspects worldwide.
Yes. That's right. In addition to this, concerning Europe, if you would like to delve deeper into the specifics, you can visit and check out our various social media platforms for more insights. Regarding Japan, I believe we can explore that topic further because we intended to cover it in the last episode, but unfortunately we ran out of time before we could do so.
Oh, right. In Japan, it is widely recognized that the primary focus is now on Koizumi Sanae, and there is a significant likelihood that she will proceed to dissolve the Diet, which would lead to new elections and potential shifts in the political landscape. The House of Representatives will be dissolved in the next meeting. So what happens after the dissolution? There will be elections. Yes, the primary reason for dissolution is typically to strategically reshuffle and consolidate your existing support base for improved effectiveness. Koizumi's current popularity is very high, over 70%.
Japan currently has a very high level of public support, and that's why suddenly it has increased. The stock market has also maintained a high level of support.
It's not solely because I recall that after he made several comments, the Japanese people felt that his remarks were, in fact, somewhat off the mark. That is, these comments may possibly pertain specifically to Taiwan and Japan relations.
Only the Chinese don't like it.
No, I've seen some Japanese people mention in interviews that I consistently caution you about one important thing. Don't watch Chinese media because what you see are merely Douyin clips. Instead, I prefer watching genuine Japanese media for authenticity. So sometimes there are Chinese individuals who can fluently speak Japanese. Haha.
Hey, there are millions of Chinese living in Japan.
That's good. You can continue.
In Japan, their significant popularity greatly assists them in securing, the all-important re-election process. After the successful re-election, they promptly reorganize both the parliament and the government cabinet effectively. Everyone anticipates that the government will implement more radical and transformative fiscal policies, which is also the reason why there is currently a significantly high level of market expectation among investors and analysts alike. Regarding the yen, have you seen the yen's performance? That's the reason. For the time being, it appears that the Bank of Japan has decided not to take action by intervening in the selling of currency. If we discuss the current situation this year, the likelihood of sustaining a weak yen is considerably high. Whether it will continue to weaken is uncertain. I don't think it will drop to 600, 700, or 800. Keeping the yen relatively weak is advantageous for boosting Japan's export competitiveness. In fact, you can clearly see that wages are rising moderately and steadily, while corporate capital expenditures are also showing a noticeable increase. These indicators reflect a moderate and steady recovery of the entire economy overall. You see, Japan has happily passed through some tough times, right? It's reaching new highs consistently. Yes, indeed. These are all very encouraging and positive signs. At the very least, I believe we definitely don't have to feel lost. When it comes to the economy, if you are seriously considering making investments in Japan this year, I believe it is certainly necessary to explore this opportunity. However, it is crucial that you do not adopt an overly aggressive approach, as a more measured strategy could yield better long-term results and help mitigate potential risks associated with market fluctuations. Japan, sometimes you might look at some industrial or export stocks.
Additionally, certain robust stocks may still possess considerable potential for growth, so you can continue to invest gradually without taking on excessive risk or being overly aggressive in your investment approach.
If you really must do it, just ensure that the weight does not exceed 50% of the total limit. I believe that should be acceptable.
In addition to Japan, when we discuss the stock market on a global scale, it ultimately leads us back to the performance and trends of U.S. stocks, or sometimes to other significant international markets that influence global financial dynamics.
When discussing emerging markets, it's important to note that both South Korea and Taiwan continue to maintain significant advantages in the semiconductor and electronic supply chains throughout this year. Their established infrastructure and technological expertise play a crucial role in sustaining their competitive edge. However, we should not overlook the potential investment opportunities that are present in various emerging markets around the world.
So what are the emerging markets?
India and the ASEAN nations in Southeast Asia. These countries, of course, have the downside of having relatively immature stock markets. But I genuinely believe there are numerous opportunities available there. You can consider making a moderate investment in related funds for better financial growth.
Hey, I want to ask you about something specific because I mentioned India to you in our previous conversation. At that particular time, it appeared that their economic system lacked transparency and was not very robust or strong, leading to concerns about its overall stability and reliability in the long term. Now, besides India, you also mentioned another emerging market. I'm curious about Singapore's position in this context. What are your thoughts on it?
Singapore can be a bit tricky to categorize. At times, it's viewed as an emerging market, comparable to the well-established Hong Kong. But in comparison to ASEAN, it's not truly considered an emerging market. It hasn't progressed as much. And Singapore's stock market, well, nominally exists. However, Singapore's stock market tends to exhibit low volatility, and its listed components primarily consist of local companies. Yes, that's right.
Regarding India, I have observed that some investment funds are strategically focusing their efforts on the banking and industrial sectors for potential growth and profitability. Do you believe that these two specific sectors are truly worth paying close attention to in the local market right now?
Weighted stocks in India refer to these shares. Yes. You can also buy them through ETFs.
Yes, if you discuss emerging markets, it appears that aside from a few others, they show promise.
You can utilize mutual funds, not only just ETFs. ETFs are preferable as they allow anytime exit.
Yes.
Yes. Look for related ETFs in the US market.
Yes, there are indeed plenty available. In the US market, there's also another detailed report available. Should we take the time to break it down and discuss it thoroughly in the next episode of our series?
Do it yourself, haha.
No, you definitely can't do it alone. We really need to leave a clear message for others. But we will certainly post it later, so if you're genuinely interested, please remember to check it out at that time.
In the next episode, you will talk about the actual numbers, not this report.
I will ask for the actual figures in the next episode for a promotion.
Oh, okay, got it. It's your decision now. Yes, I'm going to Japan for an inspection.
Oh, yes, exactly. That's really good to hear. The inspection, yes, and also looking into investment opportunities.
Investment opportunities are good.
Additionally, let's take some time to discuss this further because today there is another important stock I want to highlight, which is NVIDIA. Yes, NVIDIA is actually a well-known brand that produces various snack foods. It can export its H28 to China, but there are numerous conditions that must be met. Both sides, namely China and the US, have set many stipulations regarding this trade agreement, and you could say it's quite normal given the complexities of international trade, right?
Isn't that normal? You know, China used to have a high demand for it.
Now, as we discuss this topic further, it's important to note that they hold an export license, and a crucial prerequisite for utilizing this license is to ensure that the supply of processors within the US market is adequate before they are allowed to ship any chips to China. However, I am uncertain about the specific methods or criteria they will use to measure or determine whether the supply is indeed sufficient or not.
They will measure it, so this is a restriction from the US.
Furthermore, the United States government will impose a substantial 25% fee. It's about tariffs, yes, but actually it's pretty much the same. Additionally, the Beijing authorities had previously requested that several local Chinese technology companies intentionally resist the use of NVIDIA chips in their products and operations. This move reflects the ongoing tensions in the tech industry and geopolitical landscape.
Is this something that requires verification?
Is it possible that there's truly no definitive answer to this question? It appears there may be no clear solution, yet market analysts suggest that Chinese tech companies must stay competitive with global advancements. If these companies fail to adopt and utilize certain specialized high-end products, how will they ever bridge the gap and catch up with their international counterparts in innovation and technology? So it might be that this goal won't be easily achievable after all. It won't be the case that merely due to the strong call to resist, they will refrain from purchasing their chips altogether.
Companies are eager to buy, but will the Chinese side permit them to proceed? The version being circulated is that the government requires companies to provide sufficient reasons before they can purchase. Yes. If you decide to change, there will inevitably be a noticeable gap. Do you think companies need to catch up? They do. But do they want to buy? They do. So can we buy it? Can't buy it.
Yes, but isn't there a possible way to navigate around and purchase it?
That's called smuggling. Ha ha ha. Yeah, you can still smuggle to buy marijuana.
I'm not buying anything today. I'm not buying because it's illegal. Ha ha ha. So, hey, in this particular case, do you have any thoughts or insights on this recent news, or how do you see it impacting us?
Some companies are very aggressive in their strategies, yet they remain the best performers this year. I believe there indeed needs to be some pressure, yes. However, I have somewhat reduced my expenses a bit as I currently have no money. Oh, I urgently need some extra money to exchange for other stocks. Yes. So, we previously discussed that within the extensive field of artificial intelligence or its broader industry chain, there are indeed many additional components and subfields to consider. Yes, for instance, your transmission systems, data centers, and electricity providers are key sectors. I believe these two stocks still merit your attention and consideration this year.
Electricity, data centers rely heavily on electricity. Did Gary also happen to mention the possibility of buying Intel stocks before? Yes, he did. I believe that Intel is a solid option to consider, especially since this is a weekly update. It contains the latest news and developments, which is great, but personally, I don't own any Intel products at the moment. In this particular situation, everyone can continue to actively track our detailed investment notes for additional information about next year or the anticipated market trends. Therefore, concerning our thorough analysis for this episode, we are almost finished here and will soon wrap up our discussion. Thank you for your engagement and attention throughout this analysis, and we look forward to sharing more insights in the future. As I previously mentioned in the upcoming episode, we will invite a special guest to join us for an engaging discussion. They will share their insightful academic perspective, engaging in a thorough discussion about various academic topics.
You can give it to them now.
All right, I'll just quietly remain a decorative vase on the side, ha ha. In the upcoming episode, we will further delve into the intricacies of the Hong Kong market as well as the broader global market, sharing our insightful views and analyses. We look forward to seeing you next time at the same hour. Until then, take care and goodbye.